Good morning, everyone. What a day yesterday. Today is Saturday, so good morning. Friday 26 is end of the month, and I'll show you. It was a difficult day. It was a hard day because it was a low probability day. What low probability events were in it. I'll show you how to trade that for low probability event. That was a red day for me because I was not able to take advantage right after I took longs and I was adding into the longs, betting on the second leg up, but that never came up. And I took a heavy stop and then decide to stop and say, well, I'm not gonna trade anymore in the afternoon. So I did close with that red day. I think that is the best for me because I was so pity with what market does at that time. So not in a good shape to continue trading after that loss. So, but I'll show you what I will do if I were trading in the afternoon. I was really busy, so no more room. In days like this, you need to be very focused, and I was not with the right focus yesterday to trade in the afternoon. But I'll explain the day. I'll explain the day for you guys. I hope this you might find this helpful in order that you can take decisions over the real time. This is not bullshit of a static graph, right? You see that, and you're saying, "Well, I told you that it was stuff like this or whatever." No, I think that there's decisions that we need to take based on the price actions, and I will show you how to take those decisions, how to trade a low probability bank. So if you like this content, please make a make a click a like and share this for the people that you think will benefit from this analysis. So thank you very much for watching me. Enjoy the video. I'll start the review talking about the scenario in the daily chart because it's important. In some way, I was expecting, and I put it in my daily analysis. Bulls taking over above this part 220 to 52, looking for this measure move up. This is a measure move of this flag. It could be something like this, or it could be something like this. We don't know certainly, but I decide to use all this the whole two legs. I'm looking for that measure move up eventually as a target. So I have more than 1 week telling about 5594 as a target. If we see or in my analysis in my group of Discord server, my Discord server is something like, let me share it here. Where I was telling about this target 5595 9525 here, like a flag. Okay, so probabilities were in bull trend bar 5594.95 area. I was looking in bulls trying like to close at top, IOI trigger H2 bull flag, follow through. So we were looking for that. So um, what a signal is, and we'll see there right now, is a micro gap in 5508 is not filled out, which is shows a little bit more weak, weak bears. So they need to show more, right? So but in some way there were a probability to have an FVO of high of yesterday because we were in an IOI, and then we could have eventually more sellers above this pattern. right? This IOI, looking for having the second leg down. And this is also common when we have trading range and we're coming from trading range, or we are high in a channel to have those IOI and have failures above that IOI here. So that was really happened yesterday. So we were expecting that FBO, but looking for closing a 5508 micro gap. And I was not expecting goes so far as it goes. So but in some way I was that was his probability to close that 5508 micro gap. We didn't get the 5508, but we were 2 points close to that. So it's it was a scenario that we had already outlined here. Okay, so that was essentially that. Then when we goes to the daily chart, we see clearly that eventually we have this leg one pullback here when the breakout pullback happens, right? And then leg two goes here when 247 fails. So we have leg one, leg two target already done, and that's why probably we have two legs sideways right now here. So what leg one pull back, and then leg two, we might go to the moving average, but let's see what's happening next day. For today, what I wanted to focus is the probabilities that we have probability to fail above this 249, the close of 2646. I wouldn't expect this overshoot here. Let's say that's that way, overshoot, or this exhaustion up, but it could happen. So let's see how we can try to trade a day like this. This is kind of surprise. It's an outside bar, strong outside bar, having huge range comparing with the range that we were expecting, we were having the last days. In any ways, the market is sideways here. So it could be a flag, still a flag, bull flag, or just could be a double top looking for continuation of this bear bar. It's a good bear bar. It's not closing in the low, but it's really good bull bar for bears continuing and having a second leg down. So it's a double top. It's an L2 in the daily chart. So Monday we'll see, but it's looking good if we have a good continuity of this bar. Okay, let's see. Well, let's go to the 5 minute chart, and I have to tell you, and I said in the introduction, I did struggle because I'll explain what I do here, and usually, low probability events killing me because I try to get the most of trends always. 40% of the time you have days like these when nothing works for when you have especially if you think you have a good trend, right? But let's see what we can do and where the market shift. That is the key for us to be prepared, right? So it's important when the decisions you need to really switch, think differently. So we have B1, B2, couple of great bars. So, even B1 closing above high of yesterday is a good long. So you get here, B1, right? So you can get one-on-one with that bar if you're a scalper. So, but this a quick profit here, okay? But when you have a follow through like this, just bull bars, doji, it's not the best. It's not the best micro channel, but it's still micro channel. Bars closing in the highs. This is a 15 minutes bar closing in highs. Then you have three a pause here in 15-minute bars, and then three consecutive bull bars. So you have three bars, bull bars in 15-minute chart, which is really strong, right? And then we have here this B1, B5
Connection
high.
lost.
It is a 30 minutes bar, right? So this 30-minute bar, mission move off. You have a great taking profit here area. Of course, this is the first thing we need to talk about. This is a 24 points from B1, right? And this is here from B2. This is 20 points mark, right? This is a great, you know, this is a great taking profit area. I get long on above two, right? And then I explain what I did just what I did right after, but I hold, and that was the mistake. I hold after the 25 points that I get here. I hold more, and I'll explain what I did. But essentially, you can get long here in two, above three, about seven. This is a bad signal bar, but it's enough because the contact is good. It's first time that the bar is going below another bar, so you can buy that one. We're in a breakout, so we can have this breakout up as a target here, and will be enough. So from the seven, from the guys that took the seven, right, and goes to nine, is 22 points. In the close is 21.25. It's very much the taking profit area. Okay. Ah, do we know that this is gonna revert that way? This is an exhaustion. This is a big bar seven. So when the big bar seven have followed through like eight, we can say, well, this seven will will look for a measure move off. That's what I think, because it has followed through. So we usually make this, right, and look for the 5591, right? And this is matching with what I was expecting from the daily chart, goes to that area. So for me, will be enough to exit here in 5591.5. That was what I'm trying to get from this breakout. But this is also a very huge bar, so it's a climax eventually, right? We can always say that this could be a climax bar, climatic bar, right? That's one of the conclusions, but we don't know if we're gonna revert all of that. When it have followed through, the chances that this bar seven has be a climax is less, let's say that way, right? And then nine follow through, three follow throughs, closing in the heights. To be honest, this bar will at least will have a second leg up, right? So that what I was expecting, right? So second leg up, at least a second leg up testing, right? So the height of the day, the close of nine, that what we're looking for. That's the normal stuff, right? So people will say, it wasn't exhaustion. It was clear that wasn't exhaustion. Come on, guys, that's bullshit. It's not clear because you have followed through. There's no way that somebody knows with the graph done. Of course, everyone knows everything, right? So but when it's in the real time, you don't at least you have to wait what's happening with the pullback. You need to wait. So if you are holding, I try to make some swings, I have more than 25 points here, right? And then I did hold to see what's happening in the second leg, right? One of the things that I did is I tried and then we'll analyze this bar 10. This bar 10 is really nice bar for bears because it reverted three consecutive closes here, right? So reverted these three closes. That's the first element we'll see here. But I fade this bar in NQ in Nasdaq to get to get to get a scalp. What I did was I fade this bar here, stop at 7, looking for closest 9, right? And when I fade it, I put in my break even here, was not touched, and 13 was trying to get above 12, and it didn't. Then 14, 15 take me out on break even. But it's interesting. Try once, try two, and then don't go to test 9, which is means that in some way you have bull trap out here, right above 8 is one that were here in the close. So you have some bulls trapped here, but that's okay. That's enough to say that it's gonna break. It's gonna revert all of this. I don't think so, right? So you can even try it again after these two bull bars, buying in the close of 10, right? Especially after this failure. So you can buy here in 16 to see if we get it's H2 wolf flag, right? So H1, H2 wolf flag, and then trend resumption. Here, you still have to buy. There's no way to sell 14 here, especially when you have 10, but you have some bears trap out here.
Connection lost.
So the normal thing here is to buy here, buy, put the stop on 7, and then try to get the second leg. So I buy more here, right? I buy more here, duplicate my size position, right? And then we have that 17 at Emma. So this is a wedge. So I bought more in 17 3 times. So stop at 7 again, and 6, right? Put my stop in 6, and then here is where we really need to think about it. So strong bull spike, right? And then a wedge bull flag immediately. That's not normal. Normal is when you have a strong bull spike like this. Of course, this is really climatic, right? Because the price is going so far quickly. So we can expect 2 legs down, looking for taking profit, and this here makes sense until here, right? But at wedge at that time, it means that it's not go so far. So at this time, when we see a wedge, I bought more, looking for getting out of this flag as higher as possible. I was not thinking anymore on having leg 1 pull back, leg 2. I'm going higher, right? Probably will I was expecting more traded range price action here, and then a major turn reversal, right? But then we have here this 18 failing on the bat signal bar here. See here, and this is another breakout point here. I'm failing and closing in the so nothing changed here. It's a wedge and a tentative to break up the wedge down. But then we need to really be pragmatic here. What is to keep your premise? You don't want bars below 18. That's not normal. So what we want here is a failure of that 18 and a bull bar here, right? So to wedge and a signal bar here. What happened was the 19, and the 19 was the bar that changed completely the game. That's a failed wedge breakout, right? When you have a failed wedge breakout like this, the first things that you make is you draw your channel line here. You put it where the start of the wedge is here, and then you see you make the wedge fill and measure move down. Of course, So that 19 was so close of that measure move down. That's why you cannot sell this 19. But and it's also testing the moving average, right? So it's not a good sell 19, of course, unless you have to put your stop here. But if you see that this does not make sense, right, to put the stop like this, because probably after a breakup of the wedge, you might have a pullback there, especially when you're testing for the first time 50 minutes moving average like this, right? So then, uh, but this is a failed wedge shot. This shift the market always in short, guys. There's no more buys at least for the next 2 hours. No more buys. When you have a failed wedge like this, it doesn't matter if it's testing again. They have for yesterday here, and you have a double bottom here. It's not gonna work. It's not gonna work. For failing this, you need to have more than two legs up here, right? So it's basically here is a two legs L2 bear flag here. You can get even a scalp, buying here and trying to get out on the moving average. That's good works to reduce eventually a loss that you have here, right? So I, in my case, I was stopped out below 6 here in 19, and that's made totally sense for me. So I did what I have to do, mark what I have to do in a context that I was believing it was strong trend, because it was aligned with what I was thinking. The market decides to make the low probability event. This is a low probability event, guys. When we have low probability events, Brooks price action traders took stops. That's normal. Okay. Okay. So two legs up here with a ball bar here. It's good to fade that bar in the moving average first time after the breaking out, and then you have a flag L2 bear flag, and we trade those flags in three times or three different ways. One is the FPO of that flag, so FPO or against counter that flag, right? So especially when it's testing the moving average, or we are in the middle of the breakout bar like this. So this is a good sell fade. Then you have the breakout, the signal bar here below the moving average, and then you can get a stop order below that signal bar. That will be okay, but you need to know that you could have some sideways before breaking out, and then the breaking out of that flag here below 31 for me was the trade of the day. Okay. Another element that we need to consider when to categorize this like a flag is the following. You have below the failed wedge breakout, above you have a huge cap, right? So above the moving average even. So you didn't have here when it's supposed to be buyers in the moving average, you didn't have it. So that's the point here. And then when you go to the 15 moving average, this is normal to have. That's what I was expecting here, to have this kind of behavior, and we have it in the 15 minutes average, right? 15-minute moving average, right? So sideways, L2 bear flag, and then break up in 31. D was the trade of the day, right? I think that those were very trade of the day too, if you exit it, right? That was the trade of the day, because you know here that after a failed wedge, you can expect three legs up, down too, right? So three legs down here, breakout, failure, which fail and then three legs down again. So this is the first leg, pullback, second leg, pullback, third leg, right? Wash. And then you have 31, below 31, like you can bet, you could, because you're trading the weight of the trend, you can bet in this, you can bet in this breakout here. So this sell to breakout, you can sell, you can get short below 31 with stop order, or you can sell 32. This is a breakout bar on the close, or even with stop order. So those are the trades for 31, 32. For me, are the most high probability trade after this spike here. Okay, and then we have one leg, two legs. This is a third legs now. You see there is kind of climax in this bar 38, right? Because we're getting the exhaustion gap So getting back to this, if you have this exhaustion, you will not, you won't know when this is exhaustion. You will know that when it's reverted here in 19. So once it's reverted, you make this like this. So you switch here in 19 to always in short. You look for getting flags entries like this, looking for this target here. It's basically 7 to 9 exhaustion, measure move down. You can do it with the you can do it with the bodies, and you can do it even with the entire move. Okay, whatever is worth it for you, but that's an exhaustion gap That's the way we do it. And then you can enter anywhere here looking for that gap, for that target. So in that sense, if you get 31, you got, sorry, you got 16 points here. Another thing we have here, major support, so you can also take, but it's a good 16 point swing here. Okay, below 31. So this 37 is really dangerous. You can get it into close to, but it's close to the mission move here, 60-minute mission moving average here. So not so good because has been failing there. It's better to wait the breakout below 37 and guess this scalp here. As this is the third legs down, you get this scalp here. Just that, 8 points, very nice, right? Stops. So you buy B1, you don't expect bars below B1 because it's a breakup of high of yesterday, so stops here. Two stop here. Okay. Then 7, when you get 7, this leg, you can move your stop below 6, right? And that's it, because if you don't buy 7, it's huge bar, it's a taking profit bar. Probably you can buy 8, but this, if you buy 8, you need to exit quickly in a scalp, right? The risk is so huge. You can do something like this, buy the close and exit just in one-on-one, right? It was 4 or 5 points. Okay, so that's what you can do there. Again, you can buy 10 with stop below 7 for scalp, or even trying to get a second leg up, right? You can buy 15 with stop below 7 eventually, because you're gonna have a wedge here. So you have the edge of the wedge, let's say that way, right? So you can buy 15 looking for the second leg up, stop here temporarily, but then when you have failed wedge here, you have to exit. You will hit it anyway, right? So I faded this 17 and regret it all the day. So once I got this stop, I was so pissed, to be honest. I didn't trade anymore, but I was also busy, so in the afternoon, so no way to trade without focus. right? Um, so here's his the trades in the down. I think that those are the trades. If somebody tell you, oh, I did sell 17 below 17, come on. This is, I'll not recommend that trade. I don't think the market was here, was in short. This is a bar that also can be climatic to get the moving average, and that's it. 50% of the bull spike. I don't know. This is not a good trade, guys. So 50% is right here even. So let me see, 50% of the day. Come on. Look, 50% of the day is here even. So you can buy anywhere here, and with stop in 7, it's low here. So that's the real stuff. Well, this is the low probability event 19, and that's it. We need to live with that. But then we have this major support here, 3 legs down. So probably you will have now after wedge 2 legs up, and that's what's happening here. So you can get the 39, looking for the minor reversal, and you have it. So 2 legs up, you can exit on 44. I think that that's enough. Exit is a good bar, closing the highs, it's a climax, looking for the moving average. That was essentially, that 44, it was essentially was telling about 17. It's pretty much the same bar. So if the bulls are strong, they get a bar like 48 here, bull bar. That was expecting. And that what's happening here in 48. So that's the normal stuff. So you can fade this bar as I did here. I fade 17. I will fade this here, probably in this close, but I will fade this 44 as I did with 17, and then that works, right? Stop of this is above this swing. So we got, especially when you have this another micro gap on field of swing micro gap, you see that it's stronger in 32, right? So you can you can set it with the stop probably here in 31. If you are conservative, that will be okay. That will be okay, right? You can think that if you have a wedge, we might test this micro gap or this breakout point, and then go down. That will be okay too, because you have 1 leg, 2 legs. You have a wedge here, but it could go even higher if you consider this, right? So you see that you could go here to the 15-minute moving average. So you can make this with stop and 31, you'll be okay. If you make that trade, look at this. So you exit like this, right? So you got 9 points. Very nice trade, in fact, right? If you get it from here, stop, you got 11 points. So that's how we can trade this eventually. There were not more rooms for getting huge swings here, so we need to really live with 10 points or things like that. We have that in mind in that moment, okay? But then you have 2 legs down, 2 legs up. It's a minor reversal at the moving average. You can expect trend resumption. Now, what's happening here? So you can say, well, this 48 is a good signal bar. I don't like ball bars like this, but we're coming from where this bar is a ball bar in a context that is good, that is likely to have continuity because it's a bear trend, right? At this moment, a little bit more weak, but we still have swing gaps here open, right? And then we have this 47 with another swing, and it gives us an indication that we'll have another gap. It gives an indication that we'll have more bear control over the rest of the day. But that 58 was great entry. We have here probably a micro double bottom. Good, if we're thinking in a neutron reversal at this stage, this could be a good entry. But then when you have 58, you need to exit and even reverse down, because you need to trade based on what is what the market has control right now, that are the bears, right? Great trend. You can sell 59, but this could be an FBO, so be careful with that. So 60 is a confirmation of the breakout of this major support, right? So it's better to wait the next bar. And then we have another wedge here, micro wedge here. Look at this at the end of the day, right? And what's happening? Breakout down in 72, 73, and goes up the tick in the measure move of the wedge fail in 73. So we have a couple of wedge fail in the days, a low probability day. No, no, no. We need to call it it is, right? And then wedge, couple of legs down, taking profit. That's normal. So we can say that we have another wedge here, 51, 59, bigger wedge. So it's normal to have this kind of moving here. And then buy close to 73 to look for this two legs now up, or even both here for scalp. The close to 73 is a good one, in fact, because it was reverted 73, and all the move here above 75. The swing were above this swing here in 71. That was a breakout. So we might have some sellers here in this close, regret it, and they will exit there. So it's basically that for the day. So you can buy the close 73 and get, I don't know how many points. Look, it's nice that. Wow, 14 points. Come on. Look at this. You can even buy this 73 and exit here in this. You get 12 points there. You can exit in the close of 76. You can sell 77 and make a one-on-one. I don't think it's gonna get one-on-one, but you can exit on the close of 70. I think that is at this time is better to wait for this test and buy here with limit order and exit in the close of 76. That's what I will do. So I hope that you like this analysis. Please click the thumb up button, the like button, and let me know your comments. So where do you struggle? Explain my struggle. It was red day for me yesterday, and a huge red day, because was adding into betting on that bull spike, and I got the low probability event. That's normal. But let me know your thoughts, your comments, or your questions regarding what did you do. I'm interested to know what did you do and how to manage. That's the most important thing. So thank you very much for your time. Hope that next week we can have a great week. Thank you.